I'm Kevin Castaneda, and this is Kev's Mindset, where we talk everything finance, investing, mindset, and productivity. And today we're going to be talking about the best way to trade and hodl, just everything that has to do with Lucid and how you can get the best returns out of Lucid Motors. And so feel free to leave a like if you do enjoy, and subscribe if you are new, and let's hop right into the video. If you are new to the channel, I do speak about Lucid Motors quite a bit, as well as Coinbase, Palantir, there's many, Tesla, there's many companies I speak about. However, CCIV / Lucid Motors is one of the best, one of my favorite stocks that I invest in. And Lucid Motors is quite an interesting one, as they went up to about $60 before the news of them before the news of them merging with CCIV truly came out. And then when the news actually came out, they did fall quite substantially. And now a lot of people do tend to wonder why, okay, they fell quite a bit, and a lot of people aren't that knowledgeable about them. However, they do have a lot of potential still. Even to this day, they have so much potential, as they've fallen all the way to the levels of 18, 19, 17, even 16.99 I saw today per share. And now with these prices, everyone's wondering who does invest in them, how is the best way to invest them, and how can I get the greatest returns from this, and how long should I hold? Is the company real? And I'm gonna be covering all of that in this video. So basically, how long should you hold? Let's hop right into that. For how long you should hold, honestly, forever. The thing that I wonder the most is why people always ask, when should I sell? When should I sell? You don't need to sell. If you don't need the money, then don't sell. What's the point of selling a stock that you say you have so much conviction about, but you're going to sell it because you're down a little bit, or you're going to sell it once you get a little more profit? The only time I say you should sell is if you really need the money, and or if your conviction's gone from the stock for whatever reason. Those are the only times you should sell. Conviction's gone, or you need the money, so you're going to sell your investment so that you can cover whatever expense it is you need to cover. Or if you made a lot, you can get your cost basis back. If it is a risky investment, you can do that as well. However, that's longer term. There's a lot of people who are just like, oh, when should I sell? Should I buy at 18 and sell at 22? It's like, why would you do that? If you say you have conviction, then hold. What's the point of selling? So that's besides the point. I think you should sell probably in 2030, 2032, 2033. That's when the EV market will start to mature. Not in 2022. In a year, the market's not going to mature. About 2% of the cars on the road are EV. That's it. So no, it's not a quick trade. So if you're looking for a quick trade, you can test it, but don't sell when you're all red and you're losing money. So that's my only warning there. And that's not how I invest. So if that's how you invest, then I'm sorry, but that's not my style. So for how long should you hold it? Forever. Just keep holding. You're going to be all right. And then whenever you do feel like it's over, it's time to sell, you don't have any more conviction, or if you just want to take some profits, that's all right too. Now, we're going to get into how you should trade it and how you can maximize your profits by trading CCIV and holding it for a long time. So CCIV is quite interesting. Now, they did issue some warrants, and now what warrants are is you buy them before the stock merges, and then when they finally finish all the paperwork, they have all their S files filed, and the ticker symbol changes. Everything's it's Lucid now, right? The market cap goes up. All this happens. You can buy warrants, and then you pay an $11.50 premium on those warrants. And so right now the warrants are sitting about $7.50. So you would buy them for $7.50 at the time of this recording, of course. And then you pay an $11.50 premium when they actually merge. So now you're paying $19 per share for CCIV, as opposed to what it is right now, which is, I think it's at $18.80, something like that, the actual shares. And now the only reason warrants can be very good is because if you buy warrants, then you're kind of ensured that you're going to get this specific price. And that's great because it's kind of like an option. And having this option to buy the warrants is very good, because right now, especially as the market's dropping, if you don't have a bunch of cash, you can buy the warrants and then you'll transfer them into shares later on in the future. And you'll make substantial gains in the meantime. And that's kind of a nice way to play, and that's how I think I'm going to start playing it now. Up till now, I was buying just CCIV shares. However, now I think I'm going to be buying CCIV-WS, CCIV warrants. And those warrants are much cheaper, and I already explained them just now. But I'm going to be buying those because it gives me more time to keep accumulating more capital, and I still get to buy Lucid Motors. Now, this is very important because it gives me a nice window of time where I could keep getting more and more capital, and then later on I'll pay the $11.50 premium for those shares, and so I'll be able to accumulate them now and pay the premium later. That's kind of my whole thesis behind this. And so that is quite important to keep in mind. We could get some nice warrants, and that'll be a nice way to trade it. Now, what news do we have coming forward that are potential catalysts that will be very important for us? So we do have some news coming. Now, we don't have specific dates for these. However, we do have some potential catalysts coming that not a lot of people are paying attention to anymore, because they just see all the SPACs and all the stuff and all high PE and tech stocks coming down, and so they're kind of worried. But you do, if you are a CCIV investor, and you need to stay on the ball, you need to stay paying attention. So what we might see is, okay, so definitely we have the ticker symbol change. Now that's important, and I think we'll see a substantial rally when that does happen. We also have the first, like the CEO announced that they're going to start producing their actual cars, like that they're not beta, they're not prototypes, they're not testing anymore, but they're producing cars ready to sell. That's very important, and that's coming in the next few months. They say that by Q2 during the summer, they're going to be producing cars, and that's very important to keep in mind. They're going to be producing cars. So ticker symbol change, producing cars, and on top of that, the first customer reviews and what the customers are saying, and then continuing production. And that's when everything really gets rolling. That's when we're going to see CCIV, in my opinion, at the 35s, 40s, and beyond, and maybe even 100 by the end of the year, which was my expectations at the beginning. However, now that it's dipped so hard, we're going to still see the same substantial gains that we would have if we were buying in the 30 range, which was before, now buying in the 18, 17 range, which we're seeing now. And so I think that we might not see 100, which if we do, we're going to see crazy returns now. However, I do lower more to like an 80. I think we might be able to see a nice $80 share price by the end of this year. That wouldn't be out of the realm of possibilities, especially considering how volatile the market can be, and also how priced EV and tech stocks can be. And so we'll see what happens. However, those are the potential catalysts. That's how I think we should trade it and hodl it, and that's how you can kind of expand the amount of time that you have to buy more shares at such a cheap price. So I do hope you enjoyed this video. Thank you so much for watching up to here, and leave a like if you did enjoy, and subscribe if you are new and want more videos about Lucid, about stocks in general, about just overall theses about what's going on in the market, and it'll kind of keep you sane when the market's all red like it is today. So thank you so much. I'll see you in the next video, and this was Kevin Mindset.